In the global economy, one currency stands above the rest. It's the language of international trade, the safety net for central banks, and the most traded asset on the planet. But the US dollar's dominance wasn't inevitable. It was built, forged, and maintained through a century of geopolitical strategy. Part 1. From Gold to Bretton Woods, 1900-1945. Visuals. Archival footage of the 1944 Bretton Woods Conference, maps showing World War II devastation, in Europe vs. U.S. industrial output. Narrator. By 1945, the world was in ruins. The U.S., however, stood as the world's primary industrial power, holding the majority of the world's gold. At Bretton Woods, 44 nations made a pivotal choice. They pegged their currencies to the U.S. dollar, which in turn was pegged to gold. The dollar became the anchor of the world economy.
Part 2. The Nixon Shock and the Petrodollar, 1971-1974. Visuals. Split screen. Nixon's 1971 televised address versus modern oil tankers, a graphic illustrating a transaction, flowing from a buyer to dollars to oil producer. The gold link couldn't last. By 1971, inflation and the cost of the Vietnam War forced President Nixon to close the gold window. The world braced for the dollar to collapse. Instead, it reinvented itself. By securing agreements, most notably with Saudi Arabia, the US ensured that oil, the world's most critical commodity, was priced exclusively in dollars. To buy energy, you needed dollars. The petrodollar was born.
Part 3. The Pillars of Strength. Why it stays strong. Visuals. Infographic animations. A. Size of the economy. Scale of US GDP versus others. B. Market depth. Liquid US Treasury bond markets. C. Rule of law. Gavel, legal documents, trust signals. Why don't we just switch to something else? Because the dollar is backed by more than just government decree, it's backed by the deepest, most liquid financial markets in history. Foreign investors don't just hold dollars, they hold US Treasuries, the safest asset on earth. When global instability hits, investors flee to the safety of the dollar. This flight to safety keeps demand and the currency's value historically high. Part 4. The specialness of the dollar. Visuals. Footage of Federal Reserve chair speaking and maps of global central bank reserves. Economists call this specialness. Even when the US runs a massive trade deficit, the world keeps buying our debt. Because international trade is conducted in dollars, every central bank in the world needs a reserve of them to keep their own economies functioning. This creates an eternal, self-reinforcing demand. Montage of a shifting world, digital banking, rising global markets, and the US skyline. Today, the dollar accounts for roughly 60% of global foreign exchange reserves. While competitors and new digital assets appear on the horizon, the dollar's foundation, built on trust, scale, and global necessity, remains unshaken. The history of the dollar isn't just about money, it's the history of America's place in the modern world.